be speaking today specifically about capital raising fintechs, so peer-to-peer marketplace and peer-to-peer activity, balance sheet lending, equity crowdfunding as well. I know that's not quite this space, but still part of the nebulous. Sorry, how do I, there we go. So this year, on an annual basis, we publish what we call the Americas Alternative Finance Report. It looks at North, Central, and South America. We do a deep dive. And for the last, really the last 12 months, CLA has been really helpful in helping us identify key Canadian platforms. One of the comments that we've received over the last few years was actually, we are really not, looking at Canada as much as we ought to be. And so I was really pleased to have more engagement here, and I hope that that continues in the next year. In any event, so this year we collected data from 257 different fintech firms. Oh, this is, hold on, this is not. 11, that's not 11, it should be 39, so that's weird. And it's 357. So we collected data from 357 online platforms in 39 different countries across North, Central, and South America. Our taxonomy of alternative finance includes debt, equity, and non-investment based online channels. Like I said, marketplace activities, equity crowdfunding, real estate and property activities, but also non-investment in donation and rewards. We are excluding from our taxonomy in this particular research payments, aggregators, or just information-only platforms. We worked with 20 different research partners this year, and we had about 10% of all of our entries came from Canada. What's interesting to note is that 42% of those firms are operating in more than one jurisdiction. We have a huge cross-border activity between not just the US and Canada, but also in Latin America and Canada as well. So this is really an international conversation. With respect to total alternative finance across the region, we saw that $44.4 billion were transacted that went to individuals, to SMEs, or to projects across this region. 96% of this is from the United States. Now, while this is definitely a tremendous amount, that 96% is actually a lot less than we saw last year. Last year, the US was just under 99% of all alternative finance. So Canada has grown increasingly to 867 million, and Latin America to 739. Now, I know that 867 doesn't sound like this huge number, but actually what we've seen is Canada is growing very quickly, and we are looking specifically, at these alternative finance models. Obviously, if we were to look further across into broader fintech, this figure would be higher. With respect to Latin America, we see Brazil, Mexico, and Chile as the top three. Now, what's notable here is that Brazil actually, in the last few years, was sort of in second, third place. Because of new regulation that has made it easier for in particular, marketplace consumer lenders to be active in Brazil, we've seen a huge jump, mostly in consumer lending. Mexico and Chile are much more of a business conversation, so we see a lot of business finance happening in those two countries. With respect to the key models that we look at, so our taxonomy is actually of 16 different models. These are the key models that we saw across North, Central, and South America. As you can see, balance sheet consumer lending is the largest model for the entire region, but this is predominantly from the United States. So obviously anything in yellow is USA, gray is Canada, and the orange is Latin America and the Caribbean. This is to kind of give you just an overview of what the models look like, where there's growth, or where the transaction volume is being driven. We're going to actually look specifically at USA, but also quite critically in Canada. The other thing before we go further is to just note the work that we're doing is actually at a global level. So this research that I'm talking about today is our America study. We also do this in Europe, and with a focus on the UK and Asia Pacific, with a focus in China and Middle East and Africa. What's very interesting is that in our context, for whatever the well, not for whatever the reason, but consumer lending is a big part of what's happening in this region, but particularly from the United States. If you look at China, which dwarfs all of the other alternative finance activity, at this year $340 billion, it's also very much a consumer lending focused conversation. But almost everywhere else, business activities, borrowers that are businesses or fundraisers that are SMEs, are actually driving volume and driving innovation. So this is very much the overall region, but with, again, an emphasis with the US driving that. So with that in mind, we look at alternative finance for businesses as one of the kind of key indicators that we focus on. And in the United States, we saw this grow by about 15% to 10.10 billion. Most of this is debt-based activities. The equity crowdfunding in the United States is going through, well, to put it bluntly, going through hell. Regulation has made it very difficult for equity crowdfunding platforms to work with unaccredited or accredited investors. And so what we're seeing is a really tremendous slowdown of equity crowdfunding in the United States. And so most of this activity is really from the debt side. And non-investment based activities, so reward-based crowdfunding, although it is not a large part of volume drive, it's not a big volume driver, in terms of the population of SMEs, it's actually a pretty large percentage of SMEs that use non-investment based crowdfunding, so reward-based crowdfunding, sort of at their seed level to kind of have a proof of concept. And then what's interesting is that a lot of those SMEs then go on to different parts of the alternative finance chain. So they then may try equity crowdfunding, but they will almost always also start looking at alternative finance for credit. When we look at Canada, we saw it was $531.5 million that went this year. So we're not looking at previous years, we're just talking about this year, and that's about 9,000 new SMEs that were serviced in 2017. If we were to look at the whole nebulous, that number would be a lot larger. We're just talking about new SMEs. Business finance as a driver of alternative funding is about 61% of the Canadian market. As you can see, 96% of this is debt-based models. Then we have 3% as equity-based and 2% as non-investment based. So those are your kind of reward platforms that are proof of concepts, really. It's important to talk about Latin America since we are kind of looking at the whole of the Americas. Latin America grew in terms of business finance by 162%. This marketplace is very much, like I said, driven by debt-based models, and in particular, about 25% of the whole 2017 alternative finance volume for businesses came from Chile, and in particular, the invoice trading model. So that's been kind of one of the interesting things that we're seeing in Latin America, that invoice trading is doing very well. Marketplace business lending is doing very well, and equity crowdfunding is starting to garner more traction, partially because regulation has been written. In Mexico, there's a new fintech law that has actually allowed for a lot of platforms that were perhaps in beta to now actually become transactional. So the United States market has grown and is sort of the leader of the region, but we are seeing a lot of consolidation in the United States. And what we're noticing is that we've gone from a shift from sort of marketplace activities towards a greater emphasis to balance sheet activities. And this is largely due to the fact that it is very difficult for platforms to work to service unaccredited and accredited investors. So what we note is that this is very much an institutional investor-based driven sector. And what you see here, of course, is that for the United States, consumer lending is very much the focus. Now, context matters in the United States. I'm from the United States. Student loans are a particular problem, and what you see actually is that a lot of the consumer lending in the United States is related to some of this some of the student loan debt that we see, but also personal credit cards, things like that. So so that context matters. We are also noting that business activities are starting to gain more activity, but in terms of sort of where the models lie, this is very much a consumer lending conversation. Property and real estate have also grown, albeit because it's dwarfed by consumer lending, but it actually is growing quite nicely. And we're seeing that property and real estate activities, in particular on the sort of West Coast and East Coast, is where we're seeing the most traction happening. But there is a lot of consolidation in the marketplace. This also doesn't account for players like Marcus, which we're starting to see more and more of. This also doesn't account for big tech. So the Amazons of the world that are starting to look at the space. So this is very much that alternative finance, but if you start to look at more broader fintech activities, this figure would be quite a bit larger. With respect to Canada in 2017 is just, it's flourishing, and I imagine that we are already seeing figures for 2018 that are definitely going to cross that $1 billion mark by quite a measure. So one thing I should note is that this data that we're looking at is from 2017. Our 2018 data collection will happen next year. Everybody please participate. And what we note is that this year we saw 159% increase. And Canada's alternative finance market has been very interesting because it mimics a lot of characteristics that we see in the United States and the United Kingdom. But from a regulatory perspective, it also mimics a lot of situations that we're seeing, in countries where perhaps alternative finance hasn't taken root as much as we would have expected it, given the sort of underlying economic conditions. So you'll see from the beginning, when we started tracking this space, we grew from 94% to 141. Then we saw actually quite slow growth, but still growth at 162. But this past year, we really saw, a significant increase. And this is partially because platforms are working more with accredited investors and sort of not really looking at the unaccredited space at all, or not at all, but less so. And we're seeing a much larger focus on institutionalization. So that has been a big driver of this growth, we think. Although you obviously, as practitioners, are going to know better. So it's really important to us that we have that feedback loop so that we're always making sure that we're discussing this in the right way. What we did notice as well was that 79% of the firms in Canada have introduced new product lines and that have noted that product innovation is a major priority. So one of the interesting points that we saw, so in our survey, we asked not just about transaction volumes and the number of accredited or unaccredited investors against institutionalization, but we also really want to understand the conditions that the firms are going through or undergoing. And in Canada in particular, there was such innovation. The platforms that were based here, almost all of them indicated some level of innovation going on. And when we looked at sort of the areas that innovation was happening in, it was in automation, it was in machine learning, and we'll talk about that a bit more. The other thing that was interesting to note against the previous year was that about 70% of the funding was derived from institutional investors. That was a really big, stark difference from previous years. Now, Canada still has a very sort of crowd-focused or retail-focused market when compared to other sort of major countries that have alternative finance. But we did note that there was a lot more in institutional investor activity. We also noted that this was not just in terms of institutions, so banks, hedge funds, so on and so forth, participating with the platform to invest through the platform, but also there was a lot more in the way of referral agreements occurring, data exchanges, that sort of a thing. So that was very interesting because what we're seeing now, and I think that, and I don't know if you would agree, but what I think is that, in the last few years, there was this sentiment that alternative finance was perhaps going to sort of eat their pie. And actually now we're starting to see that banks in particular and institutions are viewing alternative finance very much as complementary to their activities. And I think that this has been really critical. With respect to the key models across the taxonomy, so very much a business lending conversation. And what we see here is that it's very much been a balance sheet business lending conversation, in part because it is because you are starting to see much more of a focus on accredited and institutions rather than unaccredited. And frankly, as the models become more and more sophisticated, we are seeing a move towards rather the orthodox marketplace activity to more balance sheet based activity. What we would note though was that almost all of the fintech firms that participated in our research are operating in more than one model, or are operating perhaps in marketplace and balance sheet activities as well. So this is not absolute. You have a lot of diversity, you have a lot of hybridization, and firms are really innovating in the way that they're kind of looking at sort of their underlying activities. In terms of growth, we saw that the balance sheet business lending model for business lending grew by 378% in 1 year. It is 57% of the Canadian market. Property is 13%, and balance sheet consumer lending is really only 1.3. Still significant though. We noticed that in the property lending space, we're starting to see not just property lending towards sort of large-scale, bridging loans or real estate development activities, but also a lot of development in the mortgage space as well. And that was in particular for this past year. With respect to the sort of more orthodox marketplace activities, we saw this increase in the consumer lending space, although again, this is not a huge part of the overall market, but still 11%, having grown at 276. And what we noted was that in terms of the sort of more orthodox business lending and property lending, each was about 1% of the market, and we saw a decrease of about 60% of those specific models, with those firms focusing more on balance sheet activities. Finally, it is worth noting that donation and reward-based crowdfunding have really significantly decreased. I think this is a very good sign. When we look at sort of the alternative finance journey, shall we say, of even the United Kingdom, if you were to look sort of 6 years ago, we really had a big emphasis on reward and donation. And as this has become a more ingrained part of our ecosystem, you see us moving away from these sort of non-investment activities towards marketplace activities in a more significant way. So in 2016, these two models accounted for 43% of Canada's overall market alternative finance market share. This year it was only 13%. And I suspect that it's probably going to remain around there. So this is actually quite a good sign. We see that as the space becomes more sophisticated, we saw this in Germany, we've seen this in Spain, we've seen this in the United States, in China. Whenever the non-investment models sort of decrease in their market share and you see more activity, especially in the balance sheet side, that's really where you start to see some really interesting sophistication. One other thing I'd like to note before we go to the next slide, well, actually, no, I'll bring it to the end. So the next thing we looked at were key risk factors. And we ask every year sort of what are the things that you are sort of most worried about that would have an impact on your business. We saw that one big concern was that of cybersecurity breaches. So one of the interesting points was that about 17% of the budget for one of these fintechs is being dedicated towards IT costs, and about 35% of that is specifically for cybersecurity. So this is definitely an area that people are concerned about and that they are addressing. Equally so, we saw fraud and increases in default as an area of concern against the last year. But on the flip side, what was interesting was that we also noted that R&D budgets have increased, and that those R&D activities that platforms are focusing on really relate to these two, to machine learning, to automation, and to customer verification. The other thing that was very interesting to us about specifically about the Canadian market was that a lot of these R&D activities are happening in-house rather than being farmed out to a consultant or to another another entity. So what we're seeing is that Canadian fintechs are really driving innovation, in particular in the credit scoring and sort of algorithm space. So it's been a very interesting. It's been very interesting to see how innovation is occurring and where that R&D focus is happening. Finally, with respect to regulation, regulation is not as huge a worry this year, though it still is. One of the things that we noted was that about 8% of the budget goes towards scoping and compliance costs. This is only for Canada. We also asked platforms to indicate what their sort of regulatory scoping and compliance costs looked like when they went into other countries. It's quite a bit higher when you look at other countries, obviously, because you're going to know your home market better. But what was really lovely to note is that actually a lot of the Canadian fintech firms, especially those that have kind of been around for a little while, are really looking at internationalization, and you do see quite a lot of advances in sort of global strategies where you will have perhaps maybe one branded domain, but then local websites. And so we're starting to see that not just across the different provinces in Canada, where you're really starting to see different activities happening, not just in major cities, but also quite critically, Canadian firms going into the United States and not the other way around, because obviously a lot of US firms have seen that Canada is a huge opportunity for them. So you have a lot of American, US firms looking into Canada and coming here. But now for this first year, we're seeing a lot of Canadian firms looking outwards. And I was actually just in Santiago 4 days ago working with the central bank there. And it was very interesting because I came across a Canadian firm that is looking at opening operations in Latin America, and they would be very well suited to do so. So I think that's kind of all of my time.